What advice would you give like a new trader who doesn't know where to start with their strategy and sticking to one that may work for them?
An advice for all traders is just really just
Hi everyone, welcome back to another interview with one of our simulated funded traders. Today we are welcome with Eduardo. How are you doing today, Eduardo?
hey, how's it going, Ellie? I'm doing all right. How are
That's
you?
I'm good. I'm good. Thank you for asking. So, hopping right into it, how did you get into trading?
Yeah, for sure. So from 2017 to 2020, um, I was in college. I was studying supply chain operations management, a 3-year diploma. Graduated from that. Thank God, everything went all right. And then 2020, around May, COVID hit. COVID came around, took over. Um, a lot of things started shutting down and whatnot. And me, on my last year of school, I had a job lined up, right? I had all that. I had my field placement set up that I was gonna go to do all that. And once I graduated, everything started shutting down. I'm from Toronto, I live in
Okay.
Canada, so we had a lot of shutdowns and whatnot during that period of like 2020.
Mm-hmm.
Um, and I wasn't working, right? Like I graduated and there was no jobs, nothing available during shutdowns. So I just really wanted to get creative and just find ways to make money online.
Yeah.
Um, I feel like a lot of people did that as well during that time.
Mm-hmm.
Uh, and I was one of them, just searching online, looking for ways to make income. And one day I came across like stocks and forex. I came across that during my research. And one day I was just scrolling through social media, I had a couple of friends post like charts and stuff.
Mm-hmm.
And I messaged them, I was like, hey, like, is this stocks, Forex, is this trading? And they basically said, yeah. So they introduced me to IM Academy. That's
Mm-hmm.
where I started. A lot of people in this industry started IM Academy, right?
Yeah.
Um, yeah, so basically, like, when I graduated in May 2020, I found out about IM Academy. I was introduced to a couple chairmans, team leaders and whatnot, and I signed up. I wanted to, figure out a way to make some money, and then yeah, I signed up to that in 2020. I stayed there for about like 6 months, just taking in a lot of content, learning a lot of new things, just learning the basics, right? Just starting from scratch, literally, because I had
Yeah.
zero knowledge about trading, right? Um, but yeah, so that first year of like in 2020, I was kind of just going literally just on and off, you know what I mean?
Mhm.
I
Yeah.
wasn't very consistent at all. Just taking a lot of content, but not really applying what I was learning, you know what I mean? Which is
Mm-hmm.
a big thing when you're first starting out. But yeah, I joined IM Academy just to really like learn how to trade and just excel my skills. I could just make some money, and then now like I'm 3.5 years in. After the first 7 months after I left IM Academy, I kind of took a little break because I wasn't finding no consistency. You know
Yeah.
what I mean? Um, However, I'm grateful for the opportunity because it kind of just got me, you know, my foot in the door.
Yeah.
I was able to
Exactly.
really learn how to like where I can branch out from here. You know what I mean? So I
Mm-hmm.
met some people I even like talk to like nowadays, my business partners, some traders as well. And yeah, my first year and my second year, I was just super inconsistent. Just kind of doing my own thing. Went through their course, their bounce back course and whatnot. Um, really just wasn't finding no consistency at all. And then I came across ICT. One of my business partners actually put me on about like a year and a half ago. Shout out to him. I owe my flowers to him. He put me on. He showed me ICT, Inner Circle Trader Michael. I went on his YouTube. We just dove deep into the content. You know what I mean? Started
Mm-hmm.
digging deep. And I've been trading ICT for about like I would say like a year now, a year and a half.
Okay.
and it's the most consistent I've found in the markets. You know what I mean?
Mm-hmm.
Um, and yeah, since then I've just been working at it. Just improving my skills. 3.5 years deep, and I'm really only just getting started now. You know what I mean?
Mm-hmm.
Um, but yeah, that's pretty much it. That's how I got started through I Am Academy. Left that, tried a little recruiting thing a little bit. Wasn't really working out for me, so I kind of just let go of that side,
Mm-hmm.
and just locked in on trading. Just the skill set itself is, which is the reason why I joined I Am.
Yeah.
That's
So
pretty much
like
how.
that beginning year, like how was that? You said you weren't as consistent. So were you like hopping right into demo account or hopping right into live account? And then what was that like?
Yeah, so I first started off like on just on a demo account. You
Okay.
know what I mean? They always say like start off on demo, don't
Mm-hmm.
start with live capital because like you're just gonna lose it, which is
Mm-hmm.
true. I've blown accounts before. When I first started, I started off demo, and then I just put like a little $200, $300, $500 in the account and whatnot, but I just lose it, right?
Yeah.
Like I didn't know what I was doing.
Yeah.
Essentially, I was gambling. I remember like my second year, I had this one like $250 account, and I just went on US 30 and just started pressing a bunch of money. And then like
US
I
30.
flipped that account, right?
Yeah.
I flipped that account. I was like, wow, this is real. And I withdraw a little bit of it, and
Mm-hmm.
I was able to see like, damn, like I literally just printed money, right? But I
Yeah.
didn't know what I was doing. I didn't have no edge. Didn't have no the psychology,
Mm-hmm.
nothing, right? So yeah, like that first year or two, like I was just going on and off, on and off. Then I really decided, like my 30 about a year ago, during this time, literally last year, I decided to like, yo, I need to start taking this serious. You know what I
Mm-hmm.
mean? I need to start treating this like a real business as it is, and really just lock in, because I know
Yeah.
this can change my life. I've witnessed change a lot of people's life. You know what I mean? And
Yeah.
yeah, like really limitless. Trading is really limitless, right? And you can do a
Mm-hmm.
lot. So yeah, those first 2 years are just super inconsistent. Now it's just like it's
Right.
an everyday thing. It's just part of my life now.
Yeah, and I think that's important. So like you like failing so much, then taking a break and then realizing like, okay, let me take this serious and treat it as a
Yeah.
business like it is. So like after you made that shift, that's when you found ICT or you did more trial and error on your own first.
No, I found ICT first.
Okay.
After I took that little break from like at least I'll say like year two, I was just really like on and off, right?
Okay.
And then cause
Okay.
I was finding no success, right? I was really making like not much money like in the markets, not money make money at all, right?
Mm-hmm.
And it's kind of hard to like work with that, right? Like you're putting in so much time and then you're not seeing any results, and you're like, is this really for me? Like you're
Yeah.
not a trader if you haven't really thought about quitting, to be
Yeah.
honest. You know what I mean?
Yeah.
Every trader that thinks about it or has thought about quitting in the past, right?
Mm-hmm.
Um, but yeah, like after like I was going through the content on I Am Academy, the educators, I was watching a lot of stuff. Um, but I just wasn't finding consistency.
Yeah.
Then I found ICT, and then I dug deep, went through his core content, his 2022 mentorship, and those are the pretty much the everything that I use to like to trade now. You know what I mean? I
Mm-hmm.
learned everything how to really read price action, um, and how to find my edge in the market.
Mm-hmm.
So
Yeah.
yeah, after
Okay.
that though, after I found ICT, um, you know, dug deep into his content, and then I really started taking it like a business.
Mm-hmm. Yeah.
Like it's a mindset, right? Trading
Mm-hmm.
treating trading like a business is a mindset. So
Yeah.
yeah,
And I really wanted like traders, even especially new traders, to like hear that timeline because I even like you said, if you haven't thought like about quitting, but then like, okay, let me not quit, because like you said, like this opportunity is an amazing opportunity and like it's endless of how much you can make potentially.
yeah,
So it's like, it's okay to fail and then realize, okay, let me take it serious and then maybe find mentorship or like, find someone that trades amazing and that's you want to kind of look up to and kind of learn
yeah.
from them. So that's a good timeline. So along that journey, like what's some things that you've learned, like either psychology wise or just in general about yourself that you applied?
Um, One big thing that I learned through trading is that I was greedy, man. You
Mm-hmm.
know, I realized that like I was a greedy individual. Like that's something like I still work towards, you know what I mean?
Yeah.
Like, but in trading alone specifically, like, when it comes to like profits, like I'd be greedy. And that's the
Mm-hmm.
one of the reasons I realized why I was not becoming profitable. It's because like I'll be in a good setup, right? And then I'll be good at profits, but I just want more. I
Yeah.
was not satisfied. You know what I mean? I still
Mm-hmm.
struggle with that sometimes. Like I'll be in such a good setup, but I'll be up like, a decent amount, but I just want more. You know what I mean?
Mm-hmm.
And just being able to manage that is key, right? Being the greed and the fear that comes along with trading um, is important. Psychologically though, like I learned a lot through like Mark Douglas,
Yeah.
like through
Same.
his YouTube content. Like I've
Yeah.
watched Mind Over Markets. That's that stuff like the
Yeah.
stuff that you on YouTube, right? Like his interviews
Yeah.
and one. The book I have here as well. Um, Trading the Zone.
Right, you
Everybody should
know.
read this book, man.
Mm-hmm.
It's a lot of
The staple book, the book
yeah.
everyone.
This is the
Yeah.
trading Bible, you know. So yeah,
Yeah.
there's that book, and then another book that I was um, dove deep into is Introduction to
Okay.
Trading.
I've never heard of that one.
Yeah, by Mike Bear. It's pretty simple, but it's a good book that like introduction really introduces you
Mm-hmm.
to trading psychology.
Yeah.
Trading the Zone is a bit more like complex, but
Yeah.
it's still a
Super
great book
complex.
nonetheless, though, you know.
Yeah. So what are
But
you
yeah,
doing like to work out that greed? Like besides reading, what are you doing to kind of like work out that?
um, just being happy with enough, you know what I mean.
Mm-hmm.
Um, Becoming more of a giving person, I feel like helps. You know what I'm saying? Um, Journaling is a big thing. Like through my journaling, I found out like that I was being greedy, that I was being emotional, that type of stuff. And out of those three things, I feel like journaling is definitely like the biggest thing that's helped me
Mm-hmm.
become
Yeah.
more aware of my greediness. You know what I mean?
Yeah.
So yeah,
Exactly.
journaling is key. It's huge, huge, huge.
Yeah.
I suggest everybody to journal how they're feeling, how they're thinking, um, and yeah, and their emotions during the moment, or whatever
Mm-hmm.
they're doing, whether it's a trade or not. But yeah,
Do you find
that's how I do with it personally.
yeah. Do you find yourself journaling every day or like how does that work with journaling?
So I actually keep like two types of journals, right?
Mm-hmm.
I have a trading journal where I journal all my trades, where it's a win loss, the asset, that type of stuff, right? Basically like an Excel sheet. And then I also have like a writing journal, which is like my thinking
Yeah.
journal, I guess to say, right? And that journal, I write down like my thoughts during a trade, before a trade, after a trade, and how I'm feeling. You know what I mean?
Mm-hmm.
And yeah, that's how I do my journaling on my
Yeah.
side.
Yeah,
You know?
same. Literally, I have journal entries from like 2020 of like, why did you take that trade? Or, next time just wait, stuff like that. So I think
Yeah,
it's been very helpful as well too.
hundred
Um,
percent, 100%.
yeah.
Me
And
too.
we
I
were
found a big improvement in my training after I started journaling.
say that one more time.
I found a big improvement in my training
Oh
after I
yeah.
started journaling everything.
Yeah.
It's good to
And
keep track of, every. That's how you treat it like a business, right?
yeah, exactly. Exactly. Keep track of your business expenses. I call like losses
Exactly.
and business expenses. So
Yes. Hmm.
completely agree. Off the call, we were talking about. Well, I was telling you like how impressive it is that you were able to grow your funded account like a little bit over 8%. Like that's very impressive because like a lot of people they struggle with passing a challenge account, like getting 8 or 10%. So congratulations on that again. So
Appreciate
how did you do that? Like how are you able to gain 8% on your account?
it. I was able to gain that just through the stuff I learned through ICT.
Mm-hmm.
My main pairs that I trade is Nasdaq,
Mm-hmm.
US 30, and gold.
Mm-hmm.
Those are my main pairs. I do trade a little bit of forex, of course, like EU, GU, AU, NU, and a little bit of USD JPY,
Okay.
but that's more of like agent session. Um, my plan and my strategy mainly focuses on time and price. I only trade really during the New York session. So like my hours of operation are from 9 to 11. that's what I'm actively looking for setups. You know what I mean?
Okay.
I'll wake up around like 8, 7:30 a.m. Do my morning routine and whatnot, which is huge, by the way.
Mm-hmm.
Like traders, you must have a morning routine before you hit the charts.
Okay.
You could agree to that, right?
Yeah.
Um, you must do something just to get, your day started. Like, you know
Yeah,
what I mean?
exactly.
Yeah, like start off your day by making your bed. That's the first win. You know what I mean?
Mm-hmm.
That's the first win of the day. As soon as you wake up, make your bed. That's out of the way, and then you can continue to do it and just build on throughout the
Yeah.
day, right? But yeah, like after I wake up and do my morning routine, I hit the charts about like 9 a.m. and I do my pre-market. Um, I don't really like taking trades before NYSE,
Mm-hmm.
and I usually wait till around like 9:45 a.m. The the
Okay.
the earliest
Yeah.
the setup. If it's on indices, US 30 or Nasdaq, I don't take no interest till 9:45. Um, but from 9:45 to about 11, I'm looking for a specific thing in price action. You know what I mean?
Mm-hmm.
Looking for liquidity sweeps. I'm looking for order blocks, fair value gaps, and that's pretty much it. You know what I
Mm-hmm.
mean? My motto is just mainly just order blocks, fair value gaps, and buy side and sell side liquidity.
Mm-hmm.
So that's how I approach the market.
Yeah. And I love asking people like how much do they risk because the answer is always
Yeah.
different. So like
Mhm.
what was your risk for your challenge account and then compare it to your funded account?
So I actually keep it about the same, to
Okay.
be honest. On my funded, I'll risk a little bit less. I'm not as aggressive
Okay.
because I want to preserve the account, right?
Mm-hmm.
But all my trades, they are not above 1%. You know what I
Okay.
mean? All my trades are from anywhere from 0.25 to
Mm.
1% per trade. And
Okay.
unless I'm very, very, very confident on a setup, the way it's A plus setup, either
Mm-hmm.
where you know, it's my bread and butter, then I'll risk 1.5.
Okay.
But besides that is like I'm usually keep it conservative at like 0.5% per trade.
Okay.
And even 1% is aggressive, you know what I mean?
Mm.
So
Okay.
yeah,
Yeah. Okay.
0.5% I'll say on average.
Mm-hmm. Okay. So did you want to share? I know you were just talking about your strategy. Do you want to share your screen and kind of go over it so we can see the visual?
Sure, yeah, we can do that.
Okay.
Let me just move this real quick. All right. So me, I like to do a top-down analysis. All right. So
Mm-hmm.
just give me a second. It's moving a little bit slow. But I like to do a top-down analysis where I start on the monthly time frame. The high time frame is key to trading. Let me just clear that. We'll go over this gold short from this morning, which is the 22 model that I've learned from ICT. So we'll do that right now. My screen moving a little bit slow just because I'm sharing it and we're Zoom, right?
Mm-hmm.
But
Yeah, no worries. It's fine.
yeah, so this is the monthly on XAU. So here we have like one, two, three highs right now,
Mm-hmm.
three equal highs. That was actually swept by this candle right here on May. So this buy side liquidity was swept, which is the reason for price to start breaking down right this area. Going on to the weekly. Hold on. All right, there you go. So in this weekly here we have a CB, sell side imbalance right here, fair value gap that price tapped into
Mm-hmm.
and started breaking down as well. sweeping this low right here. So what I like to do, part of my plan is just top down line, start a monthly, weekly, daily, and work all the way down to the 5 minute, 3 minutes, sometimes even 1 minute. I don't really like getting too deep into there because I'll get lost, you know. But I always start in the higher time frame, and I just work my way down and look for things in price, right?
Okay.
So here we're in a bearish structure right now, okay? Because if you see, take a look at this right here. Just boom, 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 boom. So.
And also, do you mind explaining what exactly a fair value gap is?
Yeah, so fair value gap is just basically a gap between candles. You know what I mean? It's just imbalance. Fair value gap, imbalance, insufficiency, IPA. Some people have different names for it.
Yeah.
But basically, right in here, this is a fair value gap. So we have a bearish candle, another impulsive movement, which left a gap between this candle and this candle right here. So this little area right here. And price retraces and goes right back into this area and broke back down. You know what I mean?
There's a gap between the wicks, is that right?
A gap between the wicks?
Yeah.
Pretty much, yes, exactly, yeah. A gap between the wicks, exactly. So here we're still working our way down. I wish this was a little bit faster, but it is what it is. We're gonna have to deal with it.
That's okay. We'll just edit that out. Kind of skip to it. I'm patient though.
Yeah, you know, I gotta have patience with this right now. So it's just I like to do a lot of wick fills. So when there's imbalances and stuff, I like to see it fully get filled. You know what I mean? Like in this example right here.
Yeah,
on the daily, so it filled and just shot right up. That's what I like to see. It's cool if price goes into the fair value gap, but I would prefer if it filled the whole thing and it broke down. Like in this case, it just filled it a little bit and broke down. You know what I mean?
Yeah.
But yeah, it is what it is. Sometimes you're not gonna get the full fill, and that's okay. Here we have another fair value gap that just gets tapped into, and we're gonna see a little bit further once we go down the time frames.
So quick question, while you're kind of going down. So when it does tap into that area, are you putting your stops above that fair value gap? Like right above it, or like you still give it some more room?
I try to give it a little bit more space. I usually wait for, so in here, in this area right now, today actually, price tapped into that daily fair value gap and it just had a bearish momentum of the day, right?
Yeah.
Before it did that though, price pushed up, and this whole move right here swept some equal highs that were left previously, right in here, buy side liquidity, which was one of PDL rays that ICT teaches. Swept that, buy side liquidity. Now, going back into the intraday, which I'm more of an intraday trader, right? I try to be in and out throughout the day. That's it. I'm not really of a swing trader, and I don't really like holding trades too long. I do try my best to hold trade if it's a swing, but I like to just be in and out, you know? Okay. So today's price action, which was this sell right here in this 4-hour candle is beautiful. I'm about to show you right now. We tapped into this rectangle, yellow rectangle right here, which is the daily fair value gap, as well as sweeping this high, this Wednesday high. Buy side liquidity. So right now we're going over the U2 model, the 2022 U2 model. We have targets to the downside right here, sell side liquidity as well. These are equal lows and more on right here. Breaking down, we're going to the 1 hour now. We're gonna see how price sweeps that This little wick takes all this liquidity out. All these
Mhm.
orders are taken out. And then if we go down to the 5 minute, now I'm looking for my model. Now I'm looking for my setup. The 2022 model, I expect that to show up now. You know what I
Okay.
mean?
Yeah.
That model basically consists of liquidity sweeps and reversals.
Okay.
So in this case,
Reversals.
we sweat the buy side liquidity on the 1 hour and the higher time frame, and then we break it down to the 3 minute, 5 minute, 3 minute until we find an order block slash fair value gap imbalance. You know what I mean?
Mm-hmm.
Here, so we see a order block, a bearish order block, right in here.
Mm.
A bearish order block, as well as a fair value gap between 1, 2, 3 candles. You see that right here, right in here. So this is an OTE, optimal trade entry. So we have an order block, a fair value gap, and we have targets to the downside, right in here. Unfortunately, I didn't catch this trade, but whoever is in the sell right now is in big profits, and it shows right now. You
Eating
know,
for sure.
yeah, they're eating 100%. But this should be me, but that's okay. Next week, next time,
Yeah.
you know.
That's a good sign. Yeah.
Yeah. So here to the left, we still have that buy side liquidity, right? I'm gonna show you right now how this little area right here, or the order block, sweeps it. See right here, the buy side.
Mm-hmm. Yeah.
This right here was swept today, so around 10:15, 10 to 11, my kill zone. You know what I mean? I like to use macros as well. So from like 9:50 to 10:10, I like to look for fair value gaps and order blocks.
Mm-hmm.
Here it played out perfect. From 10 to 11, my kill zone. You can see how price literally swept that previous buy side liquidity to the left and filled in all the way. You know what I mean? It hit this bearish order block and as well filled this right here. So a setup, this would be a perfect setup that I would take if I'm looking at the asset in the time. With about a 15, 16 pip stop, which is I'm okay with risking, targeting these equal lows.
Yeah, that's a good risk reward.
About 1 to 5, which is great. On a Friday, that's beautiful. You know what I mean? Low risk, because you're not risking too many points here. 16, like I said, boom, fell down for about 80 points to 100 points. You know what I mean? On a Friday, which is amazing. But that right there, what I just showed is just the 2022 model that he goes over on his YouTube. On a Friday, obviously, you can maybe hold to like targeted these right here, these lows. At the same time, price could reverse to the upside. You know what I mean? Because we just showed this Tuesday right here, and it's possible that we can get a sweep down here to the low and then just shoot up, or maybe continue to break down, right? But that's the 22 model that I use to my trading.
Quick question on the three. Oh,
go ahead.
Okay, on the 3 minute, you know how you saw like that fair value gap and like the order block. So if you didn't have the higher time frame confirmation, but saw that on the 3 minute, would you still take it, or you wouldn't take it?
No. Okay. I need the higher time confirmation. You know what I mean? I need the daily bias. I need something on the higher frame that's gonna show me that price wants to do what it wants to do.
Yeah.
Right.
And higher time frame definitely is the best for sure. You want that confirmation,
Yeah, this week was a little bit dry for me in terms of NASDAQ. There wasn't a lot of news. Like I'm looking at news right now. Monday, obviously, we had Labor Day, right? Like if you look through the market, like that London session on Monday, it was a huge sell-off. Like UAU or whatever. I like to use news a lot to my advantage. This week wasn't very many news, so the market was kind of weak for me. I won't lie. Nasdaq was a bit dry for me. US 30 was the pair to trade, I think, this week. Price action was very clean, in my opinion. I'll do a top-down analysis as well on this. So here on the monthly time frame, you can see how we had a little fair value gap right here, and it had a full fill, right? Right
Yeah.
here.
Yeah, I see that.
Yeah. So I like that. That's a good reaction. If I see that on a big time frame, it means like, price is gonna do some big moves, right?
Yeah.
Here now I'm on the weekly. Let me just delete this little area right here because I will do that again. So on the weekly, here after we tapped into that monthly fair value gap, we shot up.
Yeah.
Boom. A lot of explosive moves, sweeping these highs, eventually sweeping this buy side liquidity right here, which was around July, August time, so summer. But before that though, price retraced into equilibrium, which is 50% of a range, right in here, and you can see how price tapped into this fair value gap below 50% equilibrium and then shot back up. Here we have another low fill on the weekly, and the price just keep making higher highs and higher lows, right? Now going back to intraday, where we're actively looking for setups. So in this area right here, price swept this BSL buy side liquidity right here and just had an explosive move down, creating a bearish weekly order block. So the higher the time frame, the better. If you have a PO rate, which is the term that ICT uses on the higher time frame, the more significant it would be during intraday, right? So this order block is valid to me because it swept the BSL, and if you take notice, this is exactly what it looks like from that gold short. But it's on the weekly now. But if you look at the gold short, the 3-minute, this is exactly what it looks like, pretty much, right? So I'm gonna write this down right here. Weekly bearish OB, and then price swept, broke down, retraced back up. Now let's see what happens once we work our way down the time frames. Fair value gap in here.
It's so cool how you recognize it so fast too.
Yeah, it's just practice, right?
Yeah,
it's
practice
kind of my
for sure.
Yeah, just training your eye, really.
Yeah, and that's for any strategy for sure. So back testing, things like that. That's gonna help get that eye good too.
Yeah, 100%. Yeah. You back testing your model and your strategy is really what is gonna give you clarity, right?
And confidence too.
And confidence, exactly. Having confidence while trading is huge. If you're not really confident while you're executing your model, and just
gambling.
I don't really know. You need confidence everything in life, right?
Yeah.
Especially in trading for sure. But yeah, just me breaking down price right now. You know what I mean? So right in here, let me just put this up a little bit. This is very clean right here. So on the weekly order block, you see how we tapped right into it, right into this number right here, and it just broke down and started making lower lows. Boom, 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 right? And it left behind a fair value gap, another one, which is exactly what I use, right?
Mm-hmm.
Right in here. Price return into it and start breaking its way down, leaving some liquidity behind, some equal lows right here, just waiting to be swept. A lot of money under there. And here, I'll give you a very clean setup. Just bear with me while the screen loads. Right in here, this is an order block, and it has a fill, full 100% fill of this fair value gap. And I put it red because it's a sell, because I'm looking to short. Now we're gonna break price back into here. So you can see how price tapped into it again, right into that zone that we have right here, which is the 4 hour fill, 100% fill. If we go on the 5 minute, which is probably my top time frame when it comes to executions, right? Price broke down again, leaving another little fair value gap in here. Right in here, that I will label with a rectangle. %, fill. Again, that's what we want. Left an order block, all aligning with the higher time frame. You know what I mean?
Yeah.
You hit a weekly order block. That order block created a 4 hour imbalance or fair value gap that was tapped back into on a Tuesday, which is a high probability day for me personally. I don't like to trade Mondays and Wednesdays. I find those days are very choppy. Tuesday's a high probability day for me. A lot of my wins from my journey come from Tuesday and Thursdays. And yeah, this is just a model that I use literally every single day. I try to look for this model every single day, and you can see it literally just plays out beautifully. It taps into the 4 hour fill, goes in here, leaves another fair value gap on the 15 minute. That it retraces into. Sorry, this is super long, but I just love the charts, man. And you can see like price just breaks down, like it taps into that little thing, that little fair value gap, and just price continues to break down. You know what I mean?
Yeah.
Throughout the whole New York session, like if you find a trade like this, you're able to get a really high risk to reward trade, right? I can see it right here again, like during power hour, 3:30, price tapped into another order block, bearish order block. But before it did that, another fair value gap. Would you look at that? That it also tapped into, right? And if you catch a trade like this on the smaller time frame, you're able to target a higher time frame targets. So if you caught this trade, man, like
and hold it,
you're up. You know what I mean?
Yeah.
You're able to target the daily fill, the daily fair value gap. You can target these lows right here. There's another fair value gap that you can target, and just, you know, price just keeps going. But I guess I can show you one more setup. I'll show you one more little setup. Sorry.
Okay.
This one is prime. This one is prime. This is a really good one.
Okay.
I think this one was on a Wednesday. So yeah, it was this day right here. Agent session. You can see that it was pretty irrelevant. US 30, you don't expect it to move that much, right?
Mm-hmm.
Um, London session and then New York session, you can start breaking down. Prices breaking with bearish moves already from or higher time frame analysis. Don't forget we're still in that weekly order block, bearish order block.
Yeah.
And yeah, price just making its way down. Again, I'm on the 5 minute. And let's see what happens here. Beautiful.
Yeah. This
This
drop.
is beautiful right here.
Yeah. That's nice.
9:30. Price tapped into this fair value gap, the London open. 9:30 swept these little equal highs. 9:30, boom, shot right back down, retraced to a bearish order block. Bread and butter right here. This is bread and butter.
That's a good re-entry opportunity.
Oh yeah, this right here, this type of entry though, you have to drop a big lot. You know what I mean? You gotta drop a fatty out here. And yeah, this is a great setup. 10:15, 10:20, my time zone, my kill zone, you know. And you stop about 40 points. You can put it above this high, obviously, but it's a little bit risky because it is likely that this could get swept, right?
Yeah.
It could be a little bit safer, 40 points. But at the end of the day, you're still targeting, you know, the higher time frame, which is that daily fill, which is still 3.5 to 1, right?
Reward, yeah.
If you go up to that daily, you can see how price hit that weekly order block and it broke down all the way until that daily fair value gap, which I had to fulfill. Those setups is basically like kind of the setups that I use on my. It's part of my plan, you know, part of my strategy, and that's just basically what I do.
Yeah.
What I look for in the market. I'm sorry, that was a lot.
No, that's good. Thank you. No, thank you for the breakdown. That was very detailed, and I like your 3 words at the top: patience, consistency, and discipline.
Yeah, it's huge. It's huge. You gotta definitely have those 3. Those are 3 big skills that a trader must have, you know.
Well, thank you for sharing.
Yeah, no problem. Of course. I never really get to share like, you know, my charts like this. So it's pretty cool, you know. I kind of feel like
exactly.
I'm learning myself. Just doing this, you know what I mean?
Yeah, so, exactly.
That's pretty cool.
Yeah. Okay. Well, we can if you want to stop sharing, and we can I'm gonna wrap it up because it's almost 2 o'clock. I don't want to keep you too much longer. That was good, though. I feel like a lot of people are gonna learn from that for sure. I was learning.
I hope they do. I hope they do for sure. 100%.
Yeah.
You always learn something from somebody, right? Even if like, they're above or below you, whatever.
Exactly.
You know, always learns from somebody.
Exactly. Yeah. And I was learning as you were explaining fair value gap. Like I know that's like an ICT thing. I'm not super familiar with ICT. I haven't watched the video, but I know a lot of traders are super profitable watching his videos. And I see that all the time, FVG. So it's like, okay, let me ask him like to get an explanation. So that was a good explanation for sure. So thank you.
Fair value gaps are literally one of my top confirmations while I'm entering a trade. Order block, fair value gaps, and BSL/SSL, which is buy side and sell side liquidity. As long as I have those 3, I'm good. You know what I mean? As long as structured and break a structure, liquidity sweep, boom, I'm in there. I'm in the market, right?
Okay.
Now, just the hard part is just staying disciplined to that only. You know what I mean?
Yeah.
Trading what you see and not what you think, right? That's a big thing. And yeah, that's pretty much it. That's how I push the market a little bit. I wish it wasn't too slow, so I could kind of like, you know, be a little bit more smoother, but it is what it is. I hope whoever's watching this can learn a little bit. I hope you learned a bit from it, you know.
I did. Yeah. And just went away from my mind. Um, oh, so you were, as you were just saying, with being disciplined with this strategy, I feel like a lot of new traders, when they come into this industry, they're like hopping from like strategy from strategy, YouTube video, YouTube video. So like, what advice would you give like a new trader who doesn't know where to start with their strategy and sticking to one that may work for them?
Just find something that matches your personality,
Mm-hmm.
type of thing. If you're a very patient person, you could be a swing trader. If you're somebody that's not as patient, you're more like a scalper, like myself. Um, I think it's important to choose something that works for you, kind of matches like your lifestyle tune a bit. You know what I mean? An advice for all traders is just really just don't quit, man. Like I'm 3.5 years in, like I'm really only just getting started. You know what I
Yeah.
mean?
Yeah.
Like I plan on like having a lot of AUM. You know what I mean?
Mm-hmm.
Um, very high, very high. I'm building towards that. I still work a job. You know what I mean? But the goal is just to become a full-time trader, right?
Mm-hmm.
And I'm on my way there. You know, it's something I will achieve. I believe it. You gotta believe in yourself in this industry. You know what I mean?
Exactly.
It's lonely. You can have a lot of ups and downs. Um, but only the strong survive, man. You know what I mean?
Mm-hmm.
Winners never quit and quitters never win. So
Mm.
stick
Yeah.
to it. Stick to it. And those three words that I had on my chart, patience, consistency, and discipline, that's everything. That's everything in
Yeah.
this industry. You know what I mean?
Mm-hmm. Okay. Well, what is next for you? I know you said you want to get a lot of capital, but like what's the next move for you?
Yeah, so I'm also funded with my Forex funds.
Okay.
Unfortunately, they're going through, some compliance issues and whatnot. So that's kind of a little being held back a little bit. Um, but I'm not really gonna let that stop me. You know what I mean? There's a bunch of other prop firms around. I can trade my own capital too if I want, but I prefer to use prop firms, of course. Who
Mm-hmm.
wouldn't, right? They're there for a
Yeah.
reason. But what's next for me really is just scaling my business, man. Just really just keep working on myself, um, becoming the best version of myself, and just you know keep growing. Just keep growing. Have that growth mindset, and just keep at it. You know what I mean?
Yeah.
Um, I have a lot of ambitious goals that I will achieve.
Mm-hmm.
Um, and yeah, like just
Yeah.
scaling my business, becoming the best version of myself because they go both hand in
Right.
hand.
Exactly. Well, thank you
Yeah,
for taking the afternoon to interview with me. It was
yeah.
amazing. Yeah.
I appreciate you having me 100%. This is a great opportunity for
Mhm.
new traders like myself that don't really have a name out there in the industry. You know what I mean? But yeah, it's a humbling experience. I'm
Yeah.
still just getting started. Like people will know about me in the future, and then we'll see what happens from there. But I
Right.
want to thank you and the SFT team for the opportunity for sure.
No problem. You earned
Thank
it. You earned it.
you.
You deserved it actually. So no problem.
Thank you for that.
You're welcome. Thank you guys for watching another SFT interview. Be sure to like, comment, and subscribe, and I'll see you in the next video.